The Innovators Dilemma taught us that resources are always allocated to projects with the clearest ROI. And as such, despite lofty statements about innovation, most resources are invested in the core business. How can you as an innovator use this fact? The key to success is going where resources are invested at this very moment. By using lean startup methods to launch new products with the potential to scale through existing channels could for once and for all solve this famous Innovators Dilemma. And in today's session, Misha de Sterk, who is partner at Innov8rs and author of the 10x Growth Machine, will share what this means in practice and how you can get started right away. Before I hand over the mic, I want to make sure that you know how to engage with Misha. So please use the chat to engage with him and also with everyone else on the call. And then use the Q&A tool to ask your questions, at least if you're tuning in live through the Zoom webinar tool, of course. And then raise your hand if you would like to be on mic and ask your question directly to Misha. He will be presenting the first half of the session, and then we'll have a conversation. So, of course, this session is meant to address your actual issues. So don't be shy and don't hold back. Let us know all of your questions and comments. With all of the housekeeping being done, Misha, let me pass on the mic to you, and you can take it away. Welcome.
Fantastic. Welcome, everybody. Also, for me, I will put on the slides and then I will talk you to a quick introduction and the concepts of the 6 pillars, because the topics I will present, in my experience, always will raise certain tensions within a company. So this is myself already introduced. Besides my practical experience, I'm always very interested in research and doing research so that we really get an empirical understanding of what works and what doesn't work. So we talk about accelerating growth through venture building. And one of the big questions that I'm raising myself, but also probably a lot of peers in my industry, is that why is it that only 1 out of 9 companies achieve sustainable and profitable growth? And of course, there are a lot of words in this term. So sustainable, can we make it repeatable, the business? Can we scale it throughout the business? Can we make it profitable? The idea is not to get broke from starting a new business. And growth, what does this mean? Can we grow over a longer term? Well, unfortunately, or the good news is that most of the reasons why this is a difficult thing to achieve are internally. Organizational complexity, a risk-averse culture, insufficient resources, inability to focus, and missing capabilities. To my understanding, the good news is that this is in the influence sphere of the corporate. Of course, if you lose in the market, that's a different ballgame. That's the venture team that should win in the market. Now, the other question is, where does long-term growth comes from? In essence, and this is of course from Clayton Christensen, new market innovations, which basically means, can we transform products to more affordable and accessible type of products to get the people that do not have access to actually get access to our product. And the interesting part of this is that through this type of disruption, we create jobs and we drive growth in that process. Unfortunately, there's also the growth dilemma, which basically means big companies ignore small opportunities that, of course, can be tomorrow's big business. And the other mechanism is that the accounting metrics like return on investment of internal rate return, all the tool bag that traditional accountants have, they pull resources to big opportunities in known markets because there's the chance of the biggest return on investment. This leads to a broken investment cycle. So if you look at disruptive innovations or new market innovations like the Apple iPhone 3, it made it more accessible. It created a new business model. More people had access to this type of device. And then, of course, a sustaining innovation, then the Apple 4, 5, 6, 7, 8, 9, 10, 11, 12, I think we're now. And then he would like to make that whole process of producing iPhones more efficient. Though, unfortunately, most of the time, the idea that what we solve with an efficiency innovation is not invested again in a more disruptive innovation. And that leads to a company investing more and more in sustaining innovations, product innovations, and efficiency innovations. And ideally, you would like to have an investment cycle to invest in disruptive innovation. You make that innovation a better product, and you want to make it faster, cheaper, and more effective. The other part is that when a company grows, complexity also grows. And growth creates complexity, and complexity kills growth. And if we look at this chart, you see two variables. On the left side, you see scale. On the right side or downside, you see speed. And down under, you see a startup. So a startup scores high on speed, but it scores low on scale, of course. So when a startup grows to become an established company, all these things that we have talked about before, the growth dilemma, the organizational complexity, more management layers, more processes, will lead to a loss of entrepreneurship. And when you are very big, you can also actually ask the question, who is in charge? Because you have such a complicated organization, the idea that you can steer the company from a cockpit is not the case anymore. Now, so an established company scores high on scale, but less high on speed, of course. And the idea is that we need to avoid step one, to move from an established company to a dying bureaucracy, but we would like to move from an established company to move and compete on speed and scale. And that's what I call the growth machine. And to remind you of some facts is that 7% of the companies are able to capture the benefits of speed and scale. And 7%, that's not a lot, so there's a lot to gain. And at the same time, we also know, especially in the situation where we are now with COVID and more things are getting turbulent, is that change is coming. That's the thing that we know for sure. It's turbulent. Growth comes outside the core business. Many new entrants enter the market, and we have a new set of competitors against we need to fight in the market. Now, the whole question then becomes how to break through this inertia. And the idea is a dual path strategy. So here in my framework, you see two types of things. Is you see the core business on the left side, and you see the growth machine on the right side, and you see the executive board on top. And that executive board needs to steer these two engines. And one engine is to redeliver on legacy brands and product lines. And you can see that also as efficiency and sustaining innovation to stretch the growth path of the existing brands and products. And on the other side, we have the disruptive/new market innovations that go from idea to scale. And that's something that we want to nourish and scale in the growth machine, the separate entity to grow these types of innovations. So in the end, we would like to scale these capabilities so that the organization becomes a company that is capable to compete on speed and scale. And at the same time, this whole growth machine setup, that separate entity, it functions also as a change management vehicle to build internal capabilities like rapid prototyping, bringing back entrepreneurship, business model design, technology understanding. And you want to bring that to the core business. So the interlinked between the core business and the growth machine is very important to nourish, because people that build businesses will come back at one point to the core business. And this is a mechanism in way you can start transforming in a pragmatical manner the way of working also in the core business. Of course, some more stereotype examples, unless you see AB InBev in the bottom, is these are companies that can compete on speed and scale. And we know that, and they have ways of doing that. So that's where we would like to move towards. And Elon Musk has famously argued that even more important than building a great product is that you need to create the machine that makes the machine. And I think that's a nice metaphor in which we dive deeper into the 6 pillars, because of course, how do you do this? Where do we start? And I think that's a very critical question. In the end, how can we build this growth machine and systematically ideate, validate, and scale new businesses faster, and bring back the art of entrepreneurship and combine it with the skill of an incubant? And again, we want to move from an established company that is very large but not very fast to compete on speed and scale. Now, then we talk about the 6 pillars. Pillar 1 is that we talk about a governance to make decisions and to explore and launch new business models. And very critical and important is that there is senior management sponsorship and alignment around strategic areas. Where do we want to place our bets and where do we want to build our new ventures? And what is actually when is this successful? What are the growth targets? What do we need to achieve revenue-wise? But first, when we dive into the solutions, I think in the whole setup of the Unconference is also, of course, what is the problem that we would like to solve? As a good innovator should always ask that question. Now, 3 topics to cover. Aligning these topics that I will discuss now, it creates an environment in which we can operate more similar as a venture capital, which I will also explain a little bit more in depth. Topic 1 is when you start building a venture in the company, let's say in the context of an established company, we need to make it more predictable. Innovation is most of the time a black box, so we need to create more predictable timelines for go-to-market of new ideas with different milestones. When is this successful per milestone? And put adequate investment mechanics. And I will dive a little bit deeper in the topic in one of the pillars. The second part is that because a corporate is making most of the time a lot of revenue, to allocate resources to a project, the corporate team needs to come up with big numbers. So what happens more traditionally is that you create a business case and you make big numbers, and then everybody looks at you and numbers, and then maybe you get resources for your project. Ideally, in the new setup is that the venture team should be able to forecast the scalability potential of ideas for the immediate and near future. And I will also dive in that topic. Now, forecast should involve the possibility of existing channels and brands, and corporate ventures should be able to leverage these channels when ready to scale. So here you see my little light bulb is hence pick your ideas wise, because if you start with an idea that is disruptive or is a different business model, the likelihood that you can scale this idea within the setting of a corporate company, the success rate is pretty low. So that's why I said hence pick your ideas wise, because if we can show within a predictable timeline that you can enter a new market and we can scale it through an existing brand and channel, then you can forecast the scalability potential. And then you will get alignment much faster, and people, in my experience, will become more enthusiastic because you can really make an impact. So that dedicated growth governance. So what you see here is the executive board. If you remember that framework a couple of slides before, you have an executive board, and under that there's a venture board. And the venture board is responsible for beyond the core ventures, or you can read it as disruptive/new market innovations. Now, that's always a limited number of executives, a C-level person, one from R&D, one from the category, and you would like to have 1 or 2 external challengers. And what is that venture board actually doing? Setting goals and strategy, securing financial and talent resources. It's applying metered funding based on milestones, which I will explain a little bit further in the presentation. And they manage the portfolio of initiative. Which bets are going well? Which ones do we need to stop? Or where do we need to stop initiatives and reallocate people and assets to one that is more promising? And of course, you have a more, let's say, standard rhythm of meeting and the venture teams pitching to their venture board members to show progress that the team is making. Now, that venture board has also an end-to-end accountability from scouting to scaling of new ventures. So, of course, this is a more high-over view of a process, but you want to have thematic ideas linked to the strategic guidelines, which areas are seeing our own assets and capabilities and seeing how the market develops, where do we want to place our bets. Second, can we then validate certain initiatives, and the ones that are fantastic, we build them and spin them off, or we embed them in a business unit. And of course, you can do that in 3 different ways. You can build it yourself, you can co-create, or you can maybe do even acquisitions of promising initiatives in your strategic area. Now, and here you see, which is the framework I use in the book, let's say the milestones in which the venture team makes progress. So the first 5 weeks, the team needs to find a problem worth solving and a problem that is big enough for the venture board to put investments. And there are a couple of things that the team needs to show to the venture board. Clear pain points, a proven match from idea and pain point. So a problem solution fit in that sense. And the first rough size of the opportunity. Then you can say, okay, let's go, or maybe pivot or in another direction, and then start building the MVPs. So very simple pages that we show and launch in the market, 12 till 15 weeks. And the idea is then actually, can we get first customers? Can we get an understanding of the total addressable market? Can we sell the product? Can we sell it repeatable? Now, these are the milestones. And then, of course, later on, if the product is getting a good traction in the market, you want to launch it in a pilot market. And then understand, do we have recurring revenues? What is the cost of acquisition, customer retention? So the whole profitability of the case should be in place. And then when you have that, of course, then you need to scale in multiple markets. And then the scaling up part becomes a crucial factor. This also brings up another important topic: senior managers as investors. What does that actually mean? And what does this mean in practice? So a couple of things: customer obsession instead of internal complexities. The whole venture team and venture board needs to build a business around the next customer. And the venture board needs to empower that venture team to make decisions fast, which leads to the second one: fast decision making. And we're not making marketing reports. We want to build a business. So we cannot wait for 100% of the information. Every day we need to make decisions fast, and every 6-8 weeks we need to probably make more strategic decisions. So fast decision making is very crucial. This topic, it's also maybe resembling with you, is that patience for growth and impatience for revenue. What does it mean? If we want to launch a product, we want to understand very fast if we can make revenues with it. Does it get market traction? But of course, to build a 100 million business, that takes patience. That's why we want to forecast how fast can we grow to that 100 million business. But at the same time, we want to manage that expectation with the senior managers that, look, it is an interesting opportunity, but of course, to grow it into 100 million, there should be patience. What does this mean? For the leaders, demonstrate how to make problems smaller by solving the specific, not debating the ideological. We need to get stuff done. Support the teams by listening, coaching, also celebrating milestones, achievements. Exploring without judgments what the teams are learning, and shifting the focus from micromanaging to, let's say, facilitate peer-to-peer learning, and also, collaborate above categories and business units, because innovations or the market, they don't care about silos that are internally. So we need to collaborate over the business units. Pillar 2, broad portfolio of bets. So there's a 1 out of 10 success rule that basically means that if you want to launch successful products, you need to have a couple of bets in place. And this shows you that, of course, in the beginning, ideas potentially addressing pains and gains. You need to have more ideas, because the ones that will become successful will get lower due to many reasons. Maybe the team doesn't like each other anymore, or the market rejects the product innovation, etc., etc. So there are many variables why things do not succeed. That also leads to the second part, is that having that portfolio in place of different initiatives means that we need to allocate resources in the different buckets of innovation: product innovations, efficiency innovations, and more disruptive innovations. And that whole sum of the portfolio at point 3 needs to fill up the growth gap. And that growth gap is a target that innovation should reach, that the venture teams should reach. Adequate funding, very important. MVPs is fantastic to finance, but the goal of innovation is not creating MVPs and launching them. We want to scale a business. So what we see here is that if you have a target of reaching to 250 million in 5 years, that means that you need to have a lot of initiatives, as you can see, through the years, and manage that portfolio. And so if you look at the estimate number of funds, here is the portfolio in place. You want to understand your growth target, and you need to finance and allocate resources to reach actually the desired goals. That means that there is a difference between innovation budget, you have X amount of money that you can spend each year, to committed capital. Because on the longer reach, if you want to achieve the 250 million and you want to work 3-4 years on that, then you need to have capital so that you don't have to go every year luring for a new budget. And that's a big difference. That also means that there are different buckets of funding to consider. Seed round, as you know, family, friends, would you like to invest in this idea when you are an external startup? Growth money, we would like to launch certain products in the market, and we would like to scale the business, which is more in the realm of Series B. That leads to the whole idea that this is the end-to-end process in which investments get higher when you reach the milestones that you need. So in the beginning, it's more seed funding. We talk to consumers, we want to understand their problem, we launch some ideas and MVPs, we start growing, maybe selling even the MVP and the product, then we would like to launch, and investments go up as long as the team can show progress on the metrics and the business case. Identification and training of a pool of intrapreneurs. This is one of the, let's say, all these things are crucial, but if you see why, if you teams succeed or not, most of the time in early stage initiatives from idea to launch in the market, it fails because the team is not the right team per stage. So it's okay to switch team members when you start scaling a business. So the idea here is that you create multidisciplinary teams. We use a certain tool in which we look at the individual profiles of people to see, look, if we only have entrepreneurial people, and if you look at the left that score, for example, high on will, making decisions fast, and are very energetic on the right side, then you will definitely know that a lot of things will happen, but will they be actually finished? And so you would also like to have somebody that actually is more higher in control, which is on the right side of the left bucket, to make sure that to-dos are actually done, and there's more structure in the team, and that things get actually finished to the end. So that whole multidisciplinary team is a very crucial thing. And if you look then at the stages of a venture, is that can also change as said. So in the ideate, validate, launch, you would like to have a couple of types of people that, create the idea, explore how that works, but at the same time, you also want to have somebody that already thinks about, okay, when we have found an idea that gets traction in the market, how do we make a repeatable business out of it? And especially in a corporate setting, how do I get the sales force in? And how do I make a playbook for salespeople to actually sell the product? So that venture team should consist of an explorer and a scaler, more curious people, but also people that think, okay, which type of people do I need to bring in so I can scale the business in the corporate setting? Because the idea was, as you remember, we want to bring back entrepreneurship, but also use the assets a corporate have. And of course, when you have found traction in the market, you have a business model fit, you need to execute and optimize, and that's, let's say, also the exit stage of the innovation process. And then you become more like a manager that needs to make sure the right things happen. And there, let's say, the traditional toolbox that we're all known of is more relevant to use. Cooperation with startups, very, very briefly in that sense, there are a lot of smart people outside of the company, a lot of solutions already launched and tested. And I don't see a lot of collaboration happening between startups and scale-ups that actually lead to successful pilots. So here it is really integrate in your end-to-end process, understanding the ideas and problems in your customer, launching MVPs, but at the same time, you can also, of course, look in the market, like who has an interesting MVP or product that we can actually maybe work with. And how can we then leverage their tech stack already or entrepreneurial spirit to grow our business? And there, that collaboration, it's very relevant to look in that stage when you validate and test what type of companies are out there to launch faster. Last but not least, most impediments, let's say, and challenges are on the tactical level within a corporate setting. So we need to onboard supporting functions, IT, legal, HR, procurement. And I still remember that I was working with 15, 18 legal people from the legal council, and we talked about lean startup and rapid prototyping and why it's so important to learn fast and launch products faster. And it was all fantastic until I talked about selling products that do not exist. Now, if you have seen their faces, they were like, oh, how can you do this? You can mislead the consumer, reputation damage. And you know what? They're right. But from their perspective, they need to protect the core business. And we try to invent the future by creating new businesses. So take them as early as you can on board. And what does it actually mean? Use their knowledge to come up with, okay, if we have an MVP and we would like to invest small to understand if there is traction in the market, how can we do this in a good manner? And that's a tension and challenge that you need to balance both of them. So there are always people in these departments that are very eager to help you out. But you see that the amount of rules needs to go back to maybe 2 small papers in which venture teams can run experiments in a manner that also protects the core business. Second, if we have rules that do not work, we cannot wait for months, but we would like to have a decision in days or hours. So there needs to be an escalation path in which the venture team can go directly to somebody to help them out. And of course, more the mindset part, instead of things cannot be done. Okay, but how can we do it? And the most important thing there, take them on board early. That will lead to certain challenges, but in the end, you will go faster. Avoiding them will not help at all. So all these things together, all these pillars, lead to the framework of how to build this 10x growth machine. Small recap. What is the strategy and dedicated governance? What is then the broad portfolio of initiatives? And with governance, we meant how do we make investment decisions through the lean startup process? Do we have committed capital and do we apply metered funding? Which means the more progress the venture team shows, the more money we allocate to grow the business. And second, do we have an end-to-end process of step 4 from idea to scale? Can we effectively collaborate, point 5, with external startups and scale-ups throughout the process? 6, do we have that entrepreneurial workforce? How do we create these teams? Which persons are very good in starting these ventures? And 7, the early onboarding of the supporting functions. Get our legal friends on board, IT, so in the end we can go way faster. This was my presentation, and I hope it gave some topics and food for thought. So curious what's out there.
Thank you, Misha. And I like how you make it kind of simple, still complex, but understandable. I want to start with some questions that we got in the first week. And indeed, if you are on the line, you want to, go on, join the conversation, just raise your hand or post your question in the Q&A. One of the questions that is, of course, on top of many people's minds, maybe a bit depending on the industry. Let me read the question out. Misha, I would like to hear your perspective. The question was, we had a good strategy, but since COVID, business has retracted. So how do we deal with the pressure to perform short term without losing sight of the long term?
Yeah, that's something I do recognize. Hans, you also asked me in the beginning a little bit how I see this. Mm-hmm. Look, I think it's very important to... of course, you cannot wait for the long term, but if there is no mental space with the senior management to think about it because the pressing needs of the now are so, then what we need to do is shift resource to, okay, which bets can we make now to actually start creating cash and revenues that we then need to invest in more disruptive innovation. So what I have done is that, because this is something that I do recognize, of course, is that I just finished actually sessions of dialogues with the senior management of a company. in the agriculture in this sense, which was having ideas of, self-automatic robotic farming and artificial intelligence. And they thought, wow, we need to stop with that. But actually, you can also apply technologies to become more efficient. And sometimes the whole idea of, are we now actually innovating or not? Remember these 3 buckets of disruptive, sustaining, efficiency. What I would propose is proactively have research in the portfolio of what you're doing now, and then see how can we allocate tech resources and funding to the ones that will deliver in a shorter term value, which also gives, when you are successful there, it gives you much more credibility, and there's a bigger appetite to then go for the more future innovations. But it's a balance and a tension to be managed. But reallocating to sustaining and efficiency innovations is something that you can consider.
Wonderful. Thank you. Another one that came up, and again, I'm going to read it out loud. Between our 2 verticals, so this company basically has 2 units, verticals, the process of ideation incubation is different. How can we as an innovation team get some focus there?
And what do you mean with different? Let's say different from what I presented, or?
Well, I think at the moment they asked the question, they, of course, weren't part of this conversation. Though it's more like different. So one, unit does it a way, the other unit does it a different way.
Yeah. So that's also an interesting topic. Yes, that's in that sense, what I always try to do is, depends on how big is the company, but can we align on how we work from idea to scale? Because if one team is reporting on different metrics than the other team, or is using different ways of launching MVPs, then you cannot make it comparable. And then you cannot actually learn why one team is doing it better or not, because it all becomes a very subjective discussion. So if you are an innovation team in that situation, what I would do is, if you have access to senior management or the ones that make the investment decisions, is look, propose, why don't we start making our innovation process more consistent and on scale, and it becomes more repeatable. And repeatability and scalability, in my experience, are terms that senior managers like.
Right.
Because in that sense, they can understand, okay, this team is doing it this way, and then, okay, so you can make it comparable all over the portfolio. So if you have access, try to propose it, use the terms of repeatability and scalability, and, be in control of the portfolio. Most of the time that works to start the conversation.
Interesting. Another one that came up, we are strong in ideation for products. How do we go beyond that and experiment with new business models?
Yeah, good one. So also this one is, of course, I think with a lot of companies, the case. So if you have these first 5 weeks, you dive into the market, you talk with 50 to 100 consumers, you identify pain points and jobs to be done and the gains, etc., all the terms that we are well familiar with, is that at one point, what I do after these 5 weeks, I have an ideation session, 3 buckets, and identifying technology, which is relevant to solve from existing business models outside the core, see what kind of startups and companies are out there that maybe do it differently. And then you create 3 types of ideas: an efficiency innovation, a sustaining innovation, a new product, and a business model innovation. So that structuring your ideation after you identify the most important jobs and pain points. And then when you have, I always use somebody else than myself. So I use somebody external with a creative mindset that can help identify new business models. But structuring that ideation session in these 3 buckets after you have your customer problems identified, that will make it easier to show and create a portfolio of ideas in that sense.
Right. Interesting. Okay, Bogdan, if you...
Yeah, sure. Hi, Misha.
Hey, Bogdan.
So in a company where innovation is organized in functional silos, so imagine a supply chain innovation, a commerce innovation, technology innovation, and so on, and very rarely do we ever have cross-functional collaboration between them, what would be a first step to pitch this idea of having a venture board in place and placing big bets instead of doing functional scattered ideas?
Bogdan, so I think a couple of things there are relevant is that yes, of course, every company is organized in these silos, so we're all aware of that concept. Most of the time within the management, they know the limits of their own organizational model because they experience it also daily because you all work in the same corporate environment. So at the same time, but the difficulty is that big change management programs or transformational things, people get a little bit scared of it also because most of them are not successful, if we're honest. So the whole idea, there are two things, that venture board, or you can stop calling it a venture board, but you ask two enthusiastic senior managers that would like to start a different way of working, and they're always in the company, always, is that, look, why don't we choose a couple of initiatives that are very relevant to the business? So not something very disruptive or very complicated to achieve, but which ideas can we now launch pretty fast that we support the business? You take these senior people out and then you organize your venture team, not in silos, of course. So you would like a different set of skills in your venture team. And that means the explorer, the scaler, and you can translate that to, we need to have access to somebody from supply chain. We need to have somebody from R&D that understands the product technology. So what I always do is I organize a small team in which we have these different cross-functional people represented in the venture team.
Very clear, thanks.
A follow-up question on that was, let me just bring it up again. So how do we take an investment thesis around our portfolio and cascade it down into other departments? And also, how do we then hold business leaders accountable for that new structure?
Yeah, so if you have your focus on where to invest and where to place bets, so if you have, sometimes they call it in a company, strategic opportunity areas, we would like to invest in plant-based X when it's for food, for example. Or there are different examples that you can use. So these areas are important, which needs to be translated in a portfolio of initiatives. And the trap here is that we come up with a portfolio for the business. So we think, if you have plant-based, then we come up with initiative. But the very crucial part, and that's more the change management aspects of things, is we need to take these business leaders into the process of identifying, look, if we have plant-based products to put our bets in, from your business perspective and translating it to your category or to your business unit, what makes sense? What is on your mind? Maybe you already have existing insights, which is most of the time the case. So you don't want to reinvent the wheel from their perspective. So take what they already know into that process, organize a couple of strategic, let's say, dialogue sessions in which you challenge them on, look, if this is the future, how would we translate it into a business initiative? So if they come up with the initiatives themselves, is you're already transferring ownership to them, which also leads to the accountability question. If you do not take them into the process and it's more like, hey, this is what we think from an innovation perspective, why don't we start do this? Then you actually put the accountability to yourself. Because you don't take them into that process and you do not transfer actively ownership to them. And if they come up with the idea themselves, the not invented here syndrome, if we cannot have that in place, it's not a problem they want to show progress on what they have come up with themselves. So that's more, let's say, how do you organize your stakeholder management process and take these people into that and let them say what they feel. And then your role as an innovator is, look, if you think this is the future, I can have 10 other ones in place there, So right. You facilitate the tension, you facilitate and challenging the status quo. That's then your role. But innovation is not accountable for business unit outcomes.
There's a quick question on the chat. If you can put on the previous slide again with your model in one. Thank you. Let me then zoom into, you mentioned the talent aspect, which I think one of the things you said was like, hey, it's perfectly fine to have a team per stage, which basically means that at least I'm hearing that the folks who might do the initial experiments and kind of get to MVP might not or will not be part of the the thing once it evolves further. Is that a rule, or is it almost like a recommendation? How strong is it? But also, how easy is it to for teams to let it go?
Yeah, so it's. I never said it was easy. I showed it maybe more. I hope to make it more simplistic. But let's say from ideation, customer development, and MVP, if you select your team on curiosity, entrepreneurship, and make that team a little bit balanced in the sense that you don't want to have only energetic entrepreneurs, but you also want to have somebody that takes care of the team, make sure a structure is in place, and that we hold each other responsible doing certain things. That will work in essence. The roller coaster part is through the whole funnel. Through the whole process. My experience is that when you want to launch, it also becomes more, especially when you want to scale through existing channels, you need to involve the business more often. Because if we want to scale a product in retail or another channel that is in place that the company uses a lot, we need to take them into account. So that person should be very well connected in the business. They need to have access to all these people. They need to, from a reputation point, you need to have a credible person that leads that venture through that launch phase. And it becomes the character and the nature of the innovation becomes a little bit different, because in the beginning it's more exploring what assumption and experiment to test and to launch. But when you actually launch, you have a product and you start running that business on a small scale. So a lot of other things should be in place. You need to pay the bills. You need to have customer support. You have angry customers. You start becoming to run a business. So you need to have a different skill set there. And not everybody is capable of going from idea to scale, because they just don't have the action or have a different personality. So it's not so much a rule, but it's a recommendation to each time be critical. Also, not only the progress the team is making, but also, can this team take it to the next phase? And that's not a personal thing like, that person cannot do it, but it should be a more common question in your investment approach. Like, can this team actually go to the launch phase? It's a legitimate question. Yeah.
Right. And so in your experience, are these people to be found in the business? Do you need to recruit them from outside? I mean, is there a balance, outsiders, insiders?
Yeah, so I think it's always smart. It really depends on the goal. If you really want to build, there are different models in the market. Mm-hmm. So if you want to build a business, the first goal is we build a business, then you can do it also completely with an external venture builder. That's one model. There are also companies that apply a hybrid model because, yes, we would like to build a business, but we actually also want to internalize the capabilities of rapid prototyping and lean startup and all these methodologies that are out there, and they want to learn it themselves. So then you see a hybrid model in which you have, let's say, growth hackers and lean startup coaches supplementing the team of the client to launch them from idea to MVP. So in the beginning, a hybrid model can work fine, and you build up these internal capabilities. If the goal is really to reach that 250 million in year 4 or 5, which is most of the time a number that easily flows, here 250 million, you need to achieve it, then I would go for a more entrepreneurial team with experience in that industry, because you're not exploring anymore, you're scaling. And that's a different ballgame. So you can fight them internally, but they're rare in that sense. So then you need to look much better. So depending on the goals, you have different models that can match the needs of the company.
Funny thing is, one of the participants in this first week group calls mentioned we have actually an issue with people in the business letting go of their ideas. So he's leading the innovation team. They're getting hundreds or I don't know how many thousands of ideas through their challenges from people in the business, and they find it hard to let go of the idea, because he says we are the innovation team. We have the skills to actually test and kind of take it through the process. What would your advice be there?
Yeah, so it's a good thing if the business comes up with the ideas, and that's actually what we would want, because then we don't have to pull them all the time. Yeah, we need to innovate, etc. Right? So that's already a good starting point.
That's right.
Then look, make them accountable in that sense. So there are two ways to do that. You can put them in the core team, depending on the seniority of that person. It can work. I've seen many different models. Sometimes I had a senior manager in the venture team that actually had this same thing, like you said. Look, I have come up with this idea. I'm responsible for the business. I also want to drive this. So he was then part of the venture team, but he had a mentality that, look, I also embrace a new way of working because I already figured out how we launch new products in our current business. It doesn't work. And so he had an open mind to join the team. So if you feel that that's not the case, that person is not so much open-minded, then you can make another move. Say, look, you are the investor. And so you need to create a different role in that sense. You are the investor, and we need to come to you to see if you find the progress the team is making actually is good enough. So you can be that critical person to ask questions to that venture team, and that gives them also a sense of being in control. And that's most of the time, if you come up with an idea, you love that idea, you own that idea, so you want to control. You want to feel that you're in control. So you can put them in the team. Mindset is very important then. You can also place them outside the team. Then you have regular check-ins to show the progress. And most of the time, people want to be heard. So take them into account and take it seriously. And then,
So then it should work. Okay, thanks. Over to Bogdan. Follow-up question.
Follow-up question, and it's very much, I think you're starting to answer it, Misha, and a little bit Hans also with letting go. So what I think is that for these intrapreneurs to be successful, I think they need to be able to pick up various types of, projects, subjects, challenges, to be very, for these subjects to be quite different from each other. And they need to be able to attach with a lot of empathy and detach themselves as soon as the project is, spun off, integrated in the business unit or stopped. So my question to you is, you mentioned how to find those people, of course, internally or externally, but how would you build this learning agility in the environment and this behavior of easily attaching to what being customer obsessed and easily attaching to the subject and easily detaching from the subject?
So what is working well is, so if I understand your question correctly, Bogdan, how do you capture actually the learnings and understanding of if you run these teams? If you run with these team new ideas, how do we capture the learnings and start learning of what is working and what is not working, right? Is that correct?
It's more of a people or behavioral question from my point of view. It's how do we create that learning agility for them to pick up different topics every time? So let's say we can have, somebody that starts a project and it stops after a month, then starts another project, stops after 3 months. You see my point? So picking up different topics really fast and not being too attached to them.
Yeah, that's a good point. So it's already, let's say, in recruiting and selecting people to run these new initiatives, let's say, most of the time, a month, that's too short. So in general, let's say my experience is that you run these teams for 3.5 months until you hit that MVP phase. And when you're ready to launch in a designated market, the real business, then most of the time, okay, is this team really capable? Of course, when you have signals that the people are smashing each other or nothing is launched and things are going slow, then you change earlier. But it's something that to manage that expectation is already part of the recruiting and selection process. Look, it can happen that things fail. It can happen that we move to and reallocate people to another program because there's more traction in the market. That's one thing. So it's part of that selection and recruitment process and manage that expectation up front. The second part, and that's something, of course, you're familiar with mediation, and then you go to a mediator, but then actually you already have a problem. Is what we do in that process end to end is that we check in every 2 or 3 weeks, more on the team aspect. And you can call that pre-mediation, for example, but it's about, look, how are we functioning as a team? Are we listening to each other? Do we have certain difficulties, or do we have an irrational dynamic in the team? And that moves the discussion from, hey, do we hit our metrics? Do we launch products? To more, how is this team functioning? And there you can, start getting a lot of, sometimes difficulties that are not actually difficult yet, but you can start having that conversation. I think that's a very crucial part, especially when you want to go fast.
Thank you.
Another question that came up earlier, Misha, is how do we scale things that work from one innovation team to another? So how do you basically scale your approach?
Yeah, so if you, let's say, how do you scale the approach? Is that, I think, a couple of things. So if you have multiple teams running from idea to MVP to launch, etc., the teams will learn so much about, first of all, how does the market react to our ideas? That's already very insightful. But also, how does this methodology works within my company? Because a bank, ING or ABN, doesn't really matter, is a very different company than Unilever, or So there's not a one-size-fits-all formula. So we need to figure out and co-create how does this way of working actually works within my company. On culture, some cultures are more risk-averse than others. On people side, can we find these people internally? On learnings of the team. So you can set up what I most of the time do, you can call it a learning center. Sounds very big, but basically what it is, it's a physical room in the building where all the teams put their learnings from every phase on what are the insights on the product, what are the insights of our innovation process, what are the insights of how do we work as a team, how is my interaction with my senior managers and with legal and IT? Do they actually collaborate, or are they putting more challenges on my table? Or, these are the learnings that you have, and to put them visible in one room, and actually ideally would like to have every month or every 6 weeks that you come together as a group, but also with your business sponsor, and to share them not only the progress, that can be a venture board meeting, but that's more formal, can we get more money? But more in the sense, look, I tried to build a Shopify platform with IT, but they all the time say, look, it's not compliant. Okay, well, what can we do about it? Or I want to launch this product and I want to sell it, but it doesn't exist yet. So how can we then actually de-risk our venture, but still launch that product? So that's a conversation. And what actions do you get then from legal? So on many levels, you can learn so much. Mm-hmm. The weak thing, what I see most time, is that nobody captures it. Right. So you need to capture these learnings around themes that make sense in your setting, and then start sharing that with each other and having these conversations.
Right.
It's really building that muscle, It's really building a new habit and muscle of working and thinking.
Operating on two levels, right? The actual, work as well as kind of the meta, like how we work.
Yeah.
Final question from my side. So catch-22 someone proposed. On the one hand, we have customers who need more data to commit to our new, product, which we could do if we got more investment. But internally, the finance guys say there is no committed customers, so you don't get more funding. The question is, of course, how do I get out of this catch-22? So
you have customers?
Yeah, but I mean, the customers need more data to commit fully.
Yeah.
So I imagine, there's maybe some kind of a pilot or something that is kind of, positive, but they're not going to sign a contract because they need more data. But then internally they say you need to have a customer before I give you more funding. And the funding would, serve to get more data and to get the customer committed.
Yeah, so that's an interesting one. So how we always try to do it is that this comes back to that topic, can we sell a product that does not exist yet? So what we try to do is we create or web shops or landing pages in which we show the product, and we start recruiting consumers that we have found in the first part. So in the customer development part, you will find a set of consumers that have a problem and that already try to solve that problem, but the solution is sort of a little bit crappy, right? So then we try to come up with a better solution and see if then we get traction with them. And then you have different stages, or we will start selling the product and build a consumer base of people that are interested. So they put literally on the buy button, look, I want this product. It can be a food product, it can be an insurance, it can be everything. So they actually opt in on buying that product. But then we tell them, of course, look, the product does not exist. Would you like to co-create with me this product? We're now creating the first sample, or we're creating the first MVP, functional product of whatever it might be. Would you like to co-create? And then you set a bar, so that conversation you already have before coming up in that catch-22, let's say, is that you say, look, we are successful if we have 50 or 100 people on our consumer wish list that would like to co-create with us the product. And most of the time you can find them very well if you have done your customer development phase good. So you understand the consumer and you understand the pain points, etc. So you can start building up that consumer base of potentially interested people to co-create the product. That's one. The second one is that you can actually, that depends on if legal is willing to collaborate in that sense, but to actually start selling the product. And then you tell them, look, we're out of stock, or at the moment we create our first batch of products, but we will ship the product in 5 weeks. But most important things is to set up these metrics for success on, hey, we're going to build up this consumer wish list for people to co-create the product. When do you think it is successful? It's a legitimate question to ask your business sponsor that needs to invest. If you look at the market and benchmarks of sales, what do you think is a number? What do you come up with? And then the venture team needs to, work hard to fill up that consumer list.
Right. Makes sense. I guess, Misha, there's a way for folks to contact you after the session. But I don't know if you have a slide on that or you can share it with us.
Yeah, so I think the best thing is the 10x Growth Machine, which is the website. I will show it here very briefly again. You can see it here in the bottom.
Mm-hmm.
There you can find, by the way, all the tools that I have created, how to have that process for legal and IT, what type of questions to ask, the end-to-end process, the metrics per stage. So you can download the tools there. Mm-hmm. And of course, you can contact me on LinkedIn. You can contact me by email through the website. It's all good.
Perfect. Anything else you want to add to the conversation, Misha?
One thing is that what I always find interesting is that, of course, you try to put all the things that you have learned in a framework, right? And you try to make it repeatable and scalable for other people. Mm-hmm. But don't mistake the framework for reality. That's the last thing to say. That it requires really a lot of mental, capacities and stamina, and it's a fantastic journey to run. But each is different, and I have tried to create this framework and tools to give you, let's say, it gives you handholds, but don't apply it just on that's
without thinking.
Exactly.
Perfect. Thanks a lot, Misha, for sharing all of your wisdom with us.
You're very welcome. Thanks a lot.
Thanks to all of you on the line for joining us as well. Good conversation. So keep them coming. See you later today or later in the week. Bye for now.
Thanks. Bye-bye.